Hello, everyone, and thanks for taking the time to review the Morgan Hill Real Estate Market Analysis for April 2008. My name is Robert Whitelaw, and I'm a licensed real estate broker in the state of California, a member of the National Association of Realtors, and a certified ePro. Let's go ahead and jump in and take a look at our numbers for April of 2008. And we're going to go ahead and start with supply and demand for Morgan Hill. The first numbers we'll look at will be inventory numbers. And as usual, we're seeing the usual increase, but notice that the slope isn't as bad as it was last month. In other words, between 2007 and 2008 of March, there was a bigger rate of increase between those 2 years, and it seems to have slowed a little bit. Not a whole lot, but enough that I want to point it out because it could be an indication of something that might be good. Inventory is actually up 38.6% from the same time last year, which gives us a total of 334 homes currently on the market. Now, if we look at the next bar here, which represents the number of homes listed in the month of April, we can see that's actually declined. It's gone down 8.6%, which is good news. That gives us a total of 74 homes that were listed in the month of April. We've noticed ever since 2005, or actually 2004, a steady dip each successive year for the month of April with the number of folks listing their homes. This is going to work out good for us as far as helping to reduce inventory numbers, but of course, just getting some of these homes sold is going to be the big thing. Finally, let's take a look at the sales. Unfortunately, this number is declining also since 2004, when the market really started to get hit in 2005 here in Morgan Hill. In fact, it's off. Sales are down 26.5% for a grand total of 25 homes sold in the month of April. That basically gives us 13.36 months worth of inventory. So that means that if everything froze with the inventory as it is right now and the number of homes that are getting sold every month, if those numbers just stayed the same, it would take us 13.3 months to get rid of all the homes that are currently in inventory. Another way to look at this number is that for every home that sells, there are about 13 homes that don't sell, that are still out there on the market trying to get sold. In the big picture, this number is actually better than we've seen in previous months. If you've been listening for a while now, you know that we've had months where we had over 30 homes on the market for every one that sold. So we've actually headed, I know these numbers don't look good in general, but at least when we take into consideration where we've been, this particular ratio has improved, and this is a key ratio. If you've listened to other videos I've done on other parts of the communities in Santa Clara County, you know that number is an important number to look at, and being at 13.3 is actually better than we've been in the past. So it's good news, as it's bad news that's got a good twist to it in some ways. Now let's go ahead and look at the same numbers for just previous months now. What we're looking at here is going back to January of 2007. And as we usually do, we like to take a look, see where we are, see what's happened in relation to previous months, and see if we're seeing the same sort of performance as we saw at the same time last year. So let's go ahead and look back to April of 2007. And we can see that the inventory numbers actually have not increased as much this year from March to April as they did from March to April of 2007. That is a good thing. We still have insanely high inventory numbers. I mean, we're almost double the inventory that we were back then. But at least we're starting to see the top of the curve. Take a look at December. You can see how things are sort of ebbing out. Normally, we would expect to see a little bit more of an increase during this time of year because we're seeing people going on the market. But we're not seeing that. Now, if we look at the listeds, we can see that in April of 2008 versus April of 2007, we actually saw a decrease in the number of homes listed last month. We also saw a similar decrease this month. So sort of a wash there, sort of what we would expect. And for the month of April, sales look about the same. We've actually seen an increase in sales from the previous month between March and April. In fact, sales are actually up 66.7% between March and April, which is extremely good news, which is a much bigger increase than we saw between March and April of last year. In fact, it was extremely flat last year. And it was basically the same number. Sales remained flat. So this is a good indicator that we're getting some sort of a market going now for this time of year where more sales are coming up. I mean, look at it. From January to March, just pitiful sales. If I'm not mistaken, we had something in the neighborhood of 12 sales in January of 2008, which was way off from the previous year. So we've seen a ramping up. That's good news. At least we're getting some sort of a quote-unquote season of homes getting sold this year. And it looks like it's starting now. Now, what we're also seeing here relating to home prices, the average home price is down 24.1%. Look at that drop between April of 2007 and April of 2008. That's a very big drop. As I mentioned, 24.1%, and that gives us an average home price of $669,108. The median is at $655,000. So the house that sold that was in the absolute middle of all the homes that sold was priced at $655,000. Now, the highest priced home in all of Morgan Hill was on Painted Feather Drive, and that sold for $1,050,000. Its list price originally was $1,298,000, and it had been on the market for 236 days. It's interesting to note that this is a new construction home. This was a newly built home. The lowest price home was on Berkshire Drive in Morgan Hill. It sold for $497,000. Its original price was $499,000. It was only on the market for 14 days, and that was a bank-owned property. Now, there's also some interesting news here that I'd kind of like to share with you that relates to the makeup of the properties that are getting sold. As far as and what we'll do is we'll talk about that once we've covered days on market. What's interesting at this point to note, though, is the average price per square foot for homes that are currently on the market is $477.35. So all the active homes that are on the market right now, $477 per square foot. The average price per square of all the homes that have actually sold is $341. So we're seeing a pretty significant disconnect between what folks are out there marketing their homes at on average and the homes that are selling, what their average price per square foot is. Now, the average asking price out there is also a lot higher than the average home price. In fact, it's double. The average asking price out there on the market is $1,520,000 versus the homes that are selling, the average price is $669,000. So we see that indicates a lot of homes at the high end that are lopsided in the active market area. Now, for home prices just over past months, going back to January of 2007, we can see that the price change from March to April was a decrease of 11.8%. So just in the course of 1 month, from March to April, we saw a decrease of 11.8% in the average price of a home for Morgan Hill. And the total homes, again, that have sold are 25. That's the total number of homes that have sold in Morgan Hill in the month of April. So what does this tell us? Now, clearly you can see if you average out this set of graphs here, you can see a general decline. The average price has really taken a hit. When you look at the same time last year, you can see that we also saw a dip between March and April, but then we got a boost in May. So it'll be interesting to see what we get in May. Last year, our season was really April, May, June, and then we really didn't get much of a season after that. We didn't see the big jump in either number of homes sold that we would have expected, but we did get a little bit of a boost in average sales price. You can see that in July of August of 2007, we got a little boost there. Now, let's go ahead and take a look at days to sell. We're seeing 127 days here. I'm going to suggest that you not get too crazy about the fact that that number is so high. The number of days to sell was 127, which gave us a 67.1% increase in the days on market when compared to the same month last year. The month of April 2008 versus 2007, 67% increase. Now, the lowest days on market for all the homes that were on that sold in April was 6. The longest days on the market was 427. Since we only have 25 homes in this group that sold, these numbers can get a little bit more easily skewed one direction or another by certain homes that have just been on the market forever. Now, the average days on the market for all the homes that are currently active is 130 days. But if we take a look, and this is where I had some extra information here that I wanted to share with you. If we take a look at all of the homes that sold, and we look at their total days on market, we've got 236 days. And that was the home that sold for the highest price. We've got 388 days, 116 days, 132 days, 269 days. We're seeing a lot of homes that have been on the market for far longer than the average for all the homes that are active that are getting sold. We're seeing some, and what's also interesting here is that while we're seeing some really old inventory getting sold, we're seeing these homes that are selling for not a whole lot less than their original asking price. So let's take a look at this one that was 388 days on the market. That its original list price was $995,000. It sold for $910,000. Another one that was on the market for a really long time, for 269 days, was on the market for $749,000, sold for $685,000. So that's a pretty substantial drop. The 427-day house was actually the one that stood out to me. Here's one that's been on the market for 427 days. List price was $699,000. It sold for $655,000. So the point here is that what we're doing is we're seeing a lot of old homes that have been on the market for a really long time are finally selling. And in most cases, they're not selling for amounts that are profoundly lower than their list price. So that should be an encouragement. The homes that are selling have been around for a long time, but they aren't selling for these huge amounts below what they were listed for. So that should be some comforting news for folks in Morgan Hill. I don't know if I'd take it as a clear sign that the market is turning one way or the other, but I definitely get the feeling that we're starting to hit the top of the curve or the bottom of the curve, depending on your point of view. So we might see some stabilizing coming up here soon, and that'd be good news. The numbers for next month will really be an indicator of where we're going, because that would have us yet another month into what's supposed to be the big season. Now, also looking at days to sell for past months, we can see we've got some crazy days. We had the same thing happen last month, this phenomenon I'm talking about, where a lot of the homes that have really been on the market for an extremely long time are suddenly selling, so they're throwing off our numbers. That was also true in March. And this month obviously was also true, but not to the extent that it was last month. So if you were to average this out and sort of take into account these homes that are starting to sell, that where just a handful of them, 2 or 3 of the ones that are selling, have these crazy amounts of days on market, you can see that we've sort of flattened out a little bit as far as the number of days it takes. The month to month, we're seeing some variation, obviously, but in general, things are tending to flatten right around the 110, 120 day point. So that's not great. Obviously, we don't want to take 4 months to sell a home, but at least it looks like it's sort of stabilized. Whereas in previous years, the last couple of years, we've really seen the numbers continue to go up and up and up. Now, the days to sell between March and April was actually down 42%. Again, don't take that as a huge encouragement, because as we mentioned, last month's data was skewed by some homes that had really been on the market for a long time. Now, what I'd like to do now is just give you some ways to get in contact with me. If you'd like to ask any questions or make any suggestions, you can always look at my video presentations or my podcasts or the articles that I've written at my website, and that's at www.soldbyrobert.com. If you'd like to email me with any ideas, suggestions, or observations, I'd love to hear from you. You can reach me at robert@soldbyrobert.com. Or if you'd like to call me, you can reach me at 408-852-0525. Always happy to discuss real estate or whatever questions you might have relating to real estate. And finally, if you'd like to try to find me online, you can to chat with an instant messaging program on AOL Instant Messenger, Google Talk, and Yahoo IM. You can find me at The Rebel Broker, all one word. And of course, if you you or you know anyone who's interested in buying real estate, selling real estate, or investing in some real estate here in Santa Clara County, I always appreciate referrals. Again, thanks for taking the time to listen to what I have to say on these subjects, and I look forward to talking to you all next time.